from the pandemic. Joining us with our guest for tonight, we are honored to have here with us the Governor of the Central Bank, Mr. John Rwangomba. Thank you for joining the Square tonight.
Thanks for the invitation.
Thank you. We are also joined, as usual, by the Square resident panelists, and I'll start with Berna Namata. Berna, great to have you on the Square as always.
Thank you, Diana.
We are also joined by Charles Haber. Charles, great to have you on the Square as always.
Same here, Diana. How are you?
Good.
Good.
Great. So before we kick off like we always do, we're just going to touch on a couple of midweek highlights that have caught the attention of the Square residents panelists. Berna, is there anything you'd like to share tonight, or?
I'm just looking forward to the conversation.
Great.
Yeah.
Okay. Charles, is there anything you'd like to share?
Yes. As usual, we were looking forward to the cabinet meeting of yesterday, especially around the lockdown ease and the changes that are going to happen. Two particular things caught my eye. I think the border towns of Rusizi and Rubavu continue to be extremely problematic. Mm-hmm. Doesn't help that you have a lot of porous borders and people can go in and go out the way they want. Doesn't also help that I read something extremely disturbing, that people run away from a COVID-19 holding center. But one particular thing that did catch my eye was the power of religious denominations. And I personally can't wait to go back to church. I really miss Saint Etienne. But the thing that really caught my eye is, you see, when people congregate, it potentially means that you can contaminate one another, and irrespective of the religious what you're looking at. Now, this may sound it may sound on the edge of being blasphemous, but people get drunk in different ways. They may get drunk by the Holy Spirit, and they may get drunk by a glass of wine. So why not also give bars 15 days to reopen?
Okay, I think that's a conversation. Berna, is there something you'd like to add?
Yeah, no, I think Charles is so off. Because if you look at what's happening in South Africa at the moment, they've actually been forced to, and may have to reconsider easing the lockdown just because they allowed access to alcohol. So in my view, I think there should be no rush whatsoever. The bars should remain closed longest.
Okay, so that's our midweek highlights from the Square resident panelists. Interesting always between Berna and Charles, who rarely agree on, one thing or the other. I'd like to thank the Governor, Mr. Rwangomba. Thank you very much for joining the Square tonight. I know we're competing with soccer fans who are watching across the world and also in Rwanda, but this is also a very important topic. One of the key things we want to tackle are priority areas of the fund, who is eligible, how does the money go to the people, the institutions or businesses that need it most, as well as the expectations that this fund will have on the economy. And my first question to you, to our guest, is, and later on to the rest of the Square resident panelists, is so local businesses have been asked to apply since the fund came out, and if you could just start by telling us briefly, or in general, the objectives of the fund, and also what key priority areas that this fund is designed to cover.
Yeah, thanks, Diane. And again, thanks for the invitation to this evening program of the Square. As has been announced by the Minister of Finance and as approved by Cabinet, this fund is one of the different measures that the government is putting in place to try and fight or limit the negative impact of this COVID-19 crisis. This crisis is hitting us and different countries from different angles, but this one is specifically targeting to address the negative impact on the economy, on the economic activities of different economic actors in our country. So maybe you get time to discuss with the Minister of Finance on the entire program of the economic recovery plan that was also approved by Cabinet. And part of that plan is this particular economic recovery fund. The fund starts with an amount of 101 billion, with an expectation of or an intention of raising it to 200 billion. So at least we now have financing or resources to the tune of 101 billion that we, as you said, economic actors have been invited to apply to. The main objective of this fund is to support farms, businesses that were hit by the COVID crisis. Farms were hit, one, because of our lockdown, because government had to take measures to curb or to limit the spread of the virus, and therefore businesses stayed home for quite some time, and that affected their business transactions, but also globally, the logistics, the transactions globally, so the supply chains have been affected, and that's really affected the businesses here that use imported materials for manufacturing or for trade in general. But the most hit sector today, I think, is the tourism sector, and specifically the hotel industry. So government has come in to really put up some funds to ease the impact. It's not easy to get enough resources to really solve the problems of the business community, but really to ease the negative impact that this crisis has had on their businesses. So, and with the aim of at least supporting these businesses to start operations again, and start operations, with that we expect the business to maintain jobs, at least through the businesses. We're supporting the businesses, but also indirectly supporting the staff of the different farms that will be supported. Otherwise, without this support, many farms would be laying off staff, and that is, it's not just an economic impact, but also have social impacts on the Rwandans. So one, supporting jobs, supporting the businesses to continue contributing to economic performance of the country, and at the end of the day, also contribute to government revenue. So it's really to keep, it's part of the plans to keep the economy moving, and at least looking at the long-term development agenda of the country. Briefly, that's what I would say as the objective of this fund, as just one of the many initiatives government has put in place to address or to try and limit the negative impact of this crisis on the economy.
And just very quickly, I noticed, in our reading prior to the show, it says 2 years. It also, that then, begs the question, or kind of makes you think that the impact of this pandemic is actually long-term. I mean, it's not something by 2021 January, we're going to be back to business. The fund has already been set up for 2 years. So is that to show the magnitude of the impact of this pandemic? Is this why this period of 2 years exists for the fund?
The challenge with this crisis, nobody knows when it's ending.
That's true.
So we are saying supply chains, global supply chains have been affected, so we don't know when this is really opening up. But the original thinking is that we expect that within these 2 years, most of the farms were hit in the last 3 months. That's from March, in fact, from February, even when China started closing down, we had farms being affected here. So we look at in fact, when we go to criteria for farms to qualify to apply to this, we are looking at the first 5 months of this year, how their businesses were affected, and comparing it to what they had last year. Because the first criteria is that you need to prove or to demonstrate that your business was affected to the extent that your turnover reduced by 50%. The turnover of last year, the first 5 months of last year, and the turnover of the first 5 months of this year, you had a reduction of 50%. So we are saying within these 2 years, farms that were affected will have been able to take account of the impact, and therefore able to come and apply for this facility. But the payment period is much longer than the 2 years. The 2 years is just to access the fund. And we also think, because as I said, we're starting with 100 billion, we expect going forward to raise more money. So as government keeps on mobilizing more resources, we should be able to continue supporting the fund. So it's both ways, to allow firms time to reorganize themselves and be able to apply to this fund, but also as government continues to mobilize resources to this fund, they should be able, it should be open to the businesses to apply for the support.
Before we go to the next question, everybody's asking, which is what business are eligible to this fund? Who gets this sort of bailout? I'd like to hear from Charles and Bernard, if you have comments on what the governor has just said and just breaking down the objectives of the fund, as well as the priority sectors he mentioned. Bernard, I'll start with you, if there's anything you'd like to add.
I just wanted to understand whether the value chain is catered for, because we keep hearing about tourism, the hotel sector, but we hear less of, for instance, people who've been supplying hotels. Maybe you've been supplying eggs to hotels, or you've been supplying chicken, or if you've been supplying food. To what extent does the fund cater for you, and do you actually qualify? If you're such a business, are you also categorized under hotel? So to what extent is the value chain catered for?
Okay, the value chain is we have different windows. There's a specific window for the hotels, and by hotels we define a business that deals in accommodation and restaurant, but mainly accommodation of guests. I think that's the main distinguishing factor here for the hotels, because they mainly rely almost entirely on international guests. So, and for them, we expect them to face challenges much longer than the other businesses. So while yes, there are those who are supplying hotels, but they are not entirely supplying hotels. At least they have some other openings. For those will be considered in the other windows of the working capital. But for the specific window for the hotels, it's really entirely reserved for the hotels that have had their businesses closed maybe since the beginning of this year, and we expect that maybe even to continue beyond 6 months or so. So we don't know when travels, meetings or that will resume, so we expect them to be hit much harder than any other business entity. That's why they are given that special consideration. So the others will be considered, yes, but under the second window of working capital. So maybe we'll go into the details of these windows, but at least maybe I'm jumping the line to what you said will be your next question on who qualifies for this. Yes, the sector that were mainly hit, of course, one is the tourism sector, hotel industry, and the others, manufacturing, that had their supply chains affected. We have manufacturing, of course, agribusiness is part of it. We have transport, international transport were also affected. So these are the main areas affected, but even the other sectors, if you are able to demonstrate that your business was hit and you lost turnover to the tune of more than 50% of your turnover in the first 5 months of last year, automatically qualify for the working capital window. So we are not restricting these to specific sectors of the economy. We know even different sectors were hit differently. There are those that were hit most, and we expect most of their applications to be coming from these sectors. But anybody that first had a challenge with losing business, they automatically qualify.
If I could just clarify something small around the requirement around financial statements. COVID came at the point when most agencies or businesses would have been in between audits, for instance. How do you, when you talk, is there flexibility when you ask for instance, financial statements, to say if you are in between an audit, for instance, then they would consider maybe the previous year? What flexibility is there in terms of the requirements?
I think we've the guidelines say we will be relying on your returns in RRA. Your February returns will indicate your turnover, because we are looking at turnovers, and so your VAT returns in February will indicate your in February of this year. Oh, okay. Now we're pushing it to May. At least the returns, we'll be re-looking at the returns in RRA to determine how your performance of last year is compared to the performance of this year. Not really on financial statements yet. I think that was the first the thinking before, but finally thought many firms might have challenges to produce audited financial statements, which would be relied on, therefore better rely on RRA. But there's also provision that if you're not VAT taxpayer, we look at other factors that can help to estimate, and these are mainly the small and micro businesses. We look at other factors that can show how your business was affected in the last 5 months.
Charles?
Yeah. First of all, I think it's extremely commendable that the government of Rwanda, Ministry of Finance, and obviously the central bank with the Economic Recovery Fund, that the fund is in place. In certain markets, it's been left for, everyone for his own survival. And I think it's extremely commendable. The second thing that I think is equally commendable is the speed with which central bank acted. We're still going through the pandemic. We're still seeing new cases. We're still seeing people being affected in new ways. There are talks of a second wave of the virus, but the government has not sat back in its comfort and said, let's wait for everything to come back to its feet and then we act. So I think the proactiveness is something to be commended heavily. The second thing I want to comment on, and it's the fact that the hospitality sector, and indeed as Bana says, the value chain is quite expansive. But if you're to look at the bailout package and the fact that, and I stand to be corrected, Bwana Governor, that the fund cushions them against 35% of their exposure. And that's basically to mean, for argument's sake, if you borrowed 100 million, you can only be cushioned to the extent of 35 million. So assuming you're going to get an average of interest rate on the fund is 5%, the 35 million is what the 5% will be applicable to, and if you had borrowed at 16% interest rate, 65 million will be applicable at a rate of 16%. Now, the challenge I see here is, it is one thing to give the businesses a relief of how much they are paying, but it is a totally different thing for the businesses to actually be able to even pay that 5% interest rate on the 35% of their exposure. So the elephant in the room is actually business, for them to be having whatever, even if it was at 0%, what business is there for them to be able to service that component? And this is not really a question, it's to you, Bwana Governor. I think things need to be looked at more holistically. For example, would they come back to the regulatory agency and say, can we have a special tariff on the water? Because at the end of the day, you want them to get back into business and be at least, at a bare minimum break even. Can we look at the tariffs on power? Can we look at the other consumption taxes like VAT or pay as you earn? The other things that would allow the businesses that have been affected to be in a decent cash flow position to be able to remain afloat. And I think it has to be, my point is that it has to be very, be looked at very broadly. The other thing, the other comment I want to make is around the size of the fund and my worry. You see, if we are to talk about 100 billion in the hospitality sector, tomorrow morning we will throw into that pot Marriott, we'll throw in there Convention Center, we'll throw in there Uumwe Grand Hotel, we'll throw in there parking, we'll throw in there Serena, we'll throw in 4 Points by Sheraton, and Kivu Marina Bay, Epic. I'm just talking about 4-star upwards. And then before you realize, the fund is depleted. And depleted by maybe 2, maximum 3 financial institutions. Then you ask yourself, where are we? Of course, the very simple argument will be something is better than nothing. But I want to understand, is that something that has been thought about? Yes. Yeah.
Honorable Governor?
Yes, sure. Thank you. On your first comment, let me call it a comment, not a question, really is, and I agree with you, I think the main concern today is our businesses resuming the activities. And I think that's, as I said at the beginning, that's our main concern with the hotel industry and maybe say tourism in general. And again, as you rightly said, I think government is trying to do whatever they can in the current context. We don't know how far this will go, but we can't wait to assess the final impact of the crisis when we say we are at the end of it to act. So government is trying to do whatever is possible in the current context with the resources that are available. So in this case with the hotel industry, yes, if anything, what government is trying to do is try to ease their pressure on their loans, the exposure to financial institutions. So out of their 100 billion, 50 billion is specifically meant to support hotels to ease their exposure in the financial institutions. And I stress the word easing. It's not really removing the exposure. It's so as you said, I wish government had bigger muscle and be able to restructure the entire 100% of the loans of these hotels, but based on the size of the fund and to allow also other firms affected to access some resources. That's why 50% was allocated to that. And the other thing is, this fund is given 3 years grace period, and we, on the 65%. I think we leave that to the hotels and the banks, but I know the banks, again, as per the first measures taken by the central bank, banks were allowed to have a one-off restructuring for their customers. I think using that window, it's also possible to agree with their customers to restructure this 65% as much as they have agreed. Whether it's 3 years or 1 year, that's something that they're going to be negotiating. But as I said, government is here, the businesses are here, government is committed to do whatever is possible within their means to support this industry, which is one of the key strategic sectors for the long-term development of the country. So maybe down the road within the next 3 years, as we assess the actual impact of the crisis, as we look at what government has been able to mobilize, maybe something else might happen along the road. But for now, that's what we've been able to do, and I just want to stress the point that government cares and is following, is engaging, and so when possible, anything possible to continue supporting the hotel industry will be done. Now, in terms of the allocation of the resources, yes, we know. I think what we did for example, the 50 billion. Yes, they are big hotels that could, if you allow them, would take the entire amount because some of their loans are much bigger than that. But the entire loan portfolio of the hotels in the banks is 137 billion. So 35% of that is 48 billion. And so we expect that in the restructuring that has been done, maybe because that started in March, maybe some interests have accrued on the 137. So we expect the 50 billion should be able to serve 35% of the 137 billion total exposure of hotels in the banks. And each hotel will get 35% of their exposure. So if, say, Convention Center, Radisson has 100 billion exposure, they can only get 35 billion. And so each hotel will get 35% of their exposure within the banking industry. So none of the hotels will take everything and the others end up with nothing. So that's how it is structured. At least for the window of the hotel, each will get 34% of their current exposure in the bonds. Now, for the other windows of the working capital, to also ensure that they're able to serve many clients, on the one side of on the one window of the corporates, that is 30 billion, no single corporate will get more than 300 million from this 30 billion. So that's the cap. And for the SMEs, that is 15 billion, the cap is at 75 million for a single business. And each business can only access these resources once. Whether you have working with different banks, but you can only access this working capital once. And so we, as the central bank, we are centralizing all the operations around this fund. So before a bank approves financing to a certain firm, they have to check whether they haven't received similar amounts from another bank. So at least you receive it once, and maximum is 300 million. And each bank, again, we are not putting everything in one bank. So out of the 30 billion, each bank has a room to the tune of the share of their assets to the banking industry. So that means normally when you have a bigger share of the total assets, that means you are serving many more customers than the smaller banks. So therefore, you have room to take a bigger share of this fund. But again, on a monthly basis, depending on how you're serving your customers, if you don't have many of your customers qualifying to this fund, it can be allocated to other banks that have customers that are waiting. So there's us, the central bank, as managers of this fund. There is a technical committee chaired by the Minister of Finance, having other players, and there's also the national committee chaired by the Minister of Finance. So the governance of this structure of this fund is really well structured, and we have to make sure that it has equal impact, and at least it might not be easy that every business that has had challenges will have access to the fund, but at least we've tried to put really a measure that can ensure that as many as possible will have access to this fund.
I just wanted to make a little comment before you continue, Diana, on a lighter note. Sometimes when you throw heavy words like a huge percentage of your assets, in simple terms, it would mean that the banks that lend to hotels have a bigger chance of getting bailout money than those that lent for lodges.
But you shouldn't call it bailout money because it's the loan still sits on the books of the bank.
Yes.
And the bank still carries the credit risk.
And therein is actually is a bit of a challenge because the responsibility still lies with the bank to follow up their customer and ensure the customer is compliant. There will be there may be and definitely will be a huge temptation for the bank to say, I don't want to touch that money, it's not attractive to my client, because of two major things. One is the cost of that capital. Normally, under normal circumstances, a bank will probably raise capital at anywhere between 2 and 5%, and then on lend it in the average of 17%. Now here they are getting money at 0% and being asked to on lend it at 5%. So you put it on a weighing scale and say, is this really an attractive business that I'm going into, considering again that this business does not have a guarantee of paying back the money? And it brings me to a theory that probably the central bank could have considered being a kind of warehouse of these non-performing loans, or at least being a guarantor of the interest component of the hotel loans. And say, get all this portfolio. I think the good governor mentioned 137 billion. I say, fine. This 137 billion, money does not have to exchange hands. What is the interest component of that 137 billion? Can we give you banks a period when you don't have to consider these assets non-performing, and we cushion you against that, and you go about your business?
But my question to that, and Governor, although it's kind of not part of tonight's discussion, but I'm also curious, what about the economic stimulus package that was given to banks in this regard? Does it inform any of this, especially to Charles's point?
You mean the one announced by the central bank?
Yes.
No, that's different. That's really a liquidity management facility. Yes. That's it. It doesn't really. It's not part of this whole thing. But as you say, Charles, yes, there's been a lot of discussions on structuring this facility, quite a lot, and engage the banks as well, engaging the business actors. Fine, maybe the easy way would have been, say, you hotels, relax, we're going to pay your interest for the next 3 years, and but at the end of the day, is still the entire loan book is still there at the 16%, as you said. So maybe at the end of the 3 years, will they be in a better position to service this loan at 16%? Though, for the banks, yes, would have helped the banks to realize their revenues for the 3 years. But now we are saying we restructuring this facility for 3 years. In any case, this hotel is not expected, at least for the 35%, and we hope that they can negotiate the same on the 65%. Is not expected to pay anything to the banks because it's a grace period. And again, as I said, at the end of the 3 years, depending on what has happened, the government is still there, the business are still there, and the banks are still there. Things can be discussed again, but at least we did calculations around one facility to see what does this mean. One at 5%, the other at 16% payment period given to, I think, from 8 years to 15 years. And the actual net impact of this looked like, in actual fact, this borrower is moving from a net interest of 16% to 12%. So if you put everything together, all these facilities together, it's like the hotel is getting this facility at 12% net when you put everything together. So somehow it's a bit lighter than the 16%, but the most important thing is what you said first, is do they have businesses? So I think that's the main concern going forward.
I think if you can, before we go to our viewers who have quite a lot of questions lined up for you, Governor, and as you know, to the Square panelists, if you already spoke about the eligibility criteria and so forth and so on, if you could just break down for us the procedures. If I have my business, say I'm an SME, we've been talking about big businesses, but a lot of the curiosity also is for SMEs. What are the procedures in terms of application for this fund, to access this funds from the fund?
Okay, so as I said, the fund is broken into two main windows. The first window is for the hotels. I think we've talked a lot about that. The hotel just have to have a loan in the bank, and the loan has to be performing by February of this year. It shouldn't be in an NPL category. It has to be in category 1 or 2. So that's when you can qualify to get financing. Otherwise, if you're already in NPL, your business was messed up anyway. It's not because of COVID. So for the hotels, it's straightforward. And okay, you need to yes. In fact, because these loans are already sitting on the books of the banks, we're just working with the banks and the borrowers to restructure their loans. Now, for the working capital window, the conditions are more or less the same for all the business, although it's broken down into 3 main categories: the corporates, the SMEs, and the micro businesses. One, you need to prove, as I said from the beginning, that you've been affected by COVID by showing that your turnover has been reduced by more than 50% over the last 5 months. Number 2, you have to show that if you had a loan in the banks, you are servicing the loan. You're in normal category. You are not a non-performing loan owner in any given financial institution. Number 3, you need to prove that you're a good citizen. You are paying taxes. So we need to have a tax clearance from RRA. Of course, you need to show that you're a registered business in Rwanda.
Of course.
That's the number 1, the beginning. So
yes.
I think these are the main factors that will best on to. And we've also added that priority would be given to those who demonstrate that they are employed, if they had issues of their businesses and they are losing jobs, at least you're able to prove that you can reinstate your job to at least 75% of the number of staff you had before the crisis. Or if you can demonstrate in a way that you'll be increasing your turnover. But these are additional factors, maybe to give you priority among the many that might be applying. But otherwise, it's the main criteria is those 3 or 4 that I've just mentioned.
That you just mentioned. Okay, before we go to our viewers, Brenna, is there something you'd like to add based on what we've just been discussing?
Yes, I just wanted to clarify, to get a clarification from the governor regarding disbursement, because what we know typically of commercial banks, loan approvals tend to take a long time. You will have clients struggle with loan officers. Sometimes they may have to bribe them to get the credit. So given that this fund, essentially, this is government borrowing money on behalf of everyone. So this is taxpayers' money that the central bank is managing. How are you going to, one, enforce disbursement that actually responds to what the fund is intended for? Because if it's a blanket, hotels, and how do you ensure that the loan officer in a commercial bank will not prioritize his or her usual clientele? So that's one. And again, in terms of transparency, about how this fund, again, is managed, going back to this is debt that every taxpayer needs to be worried about. I'm glad that the Ministry of Finance has already put the guidelines on the website. That's already progress in terms of transparency. But going forward, in terms of how we measure progress, if we're saying a company must demonstrate that they are retaining jobs, what are some of the indicators internally that you'll be looking at to ensure that these funds are deployed where they should be and achieve the intended consequences? Thank you.
Dan, I just want to
but very briefly, because I would like the governor to answer Brenna's question.
Yes, I think Bana is absolutely spot on. You're giving banks cheap money, yet banks at the end of the day, yes. You see, what's going to happen? Banks at the end of the day have to go through the usual procedure of the KYC, of who's these, who are they, how do I know them, and so on and so forth, what collateral is there. So they still have to go through that same process anyway. Now, here you are giving somebody cheap money, and the cost of administering that cheap money is equally as high as the expensive money. So then the question I think every banker will ask themselves is, why should I go through all this hassle? The only winner, in my opinion, is going to be the bank to a certain extent, where they will just have covered themselves on a loan that had a high risk of going bad, but not the business.
Governor, if you'd start by responding to Brenna's question on enforcement.
Yeah, it's interesting questions. One is, of course, we trust the banks. I know there are issues there, but at the end of the day, they're partners in this. I'll mix it with what Charles have just said. We shouldn't be looking at it as cheap money to the banks. It's supposed to be cheap money to the borrowers. In fact, you earlier said the banks might be, the margin between the cost of financing and the interest you're charging is very limited, so they might not be that interested in the resources. But we are together in this, and as we are discussing with them, yes, the margin might be, for example, for the hotels, is just 5%. Normally, their margin is above 7%. So we agree that we are all in this to try and their clients anyway. So trying to support their clients, and that's on the hotel industry. For the working capital side, yes, the loan applications will be like any loan application. Because at the end of the day, the banks will take the credit risk responsibility. So they have to assess this credit as they would assess any other credit. The only additional criteria we've given is the 50% loss of business, paying tax, being current with any other loans they have in the banks. So otherwise, they will treat them like any other borrower, and therefore their requirements, they will need, at least the banks will need to establish that this business that I'm giving money has the capacity to pay back this loan. I think that's a big responsibility we are putting to the banks. And so after they have done the analysis of the application, then they send this file to us. We are not going into the analysis of the credit analysis the banks have done. We'll be looking at the other 4 criteria, whether this borrower fulfills the criteria put up by the government. Then, so we, at the central bank, we do what we call pre-approval. So the banks receive applications of the loans through this special window, assesses the loans where they meet the criteria the government has put up, and whether this project is still credit-worthy, whether it will be able to pay back the loan. So based on that, then they send the files to us, and we, on a weekly basis, will be approving what meets the criteria that government put up, and we say these qualify. Therefore, then the banks go on and disburse the money. Then they will come back to claim what they have disbursed from the central bank, from the fund. But I don't see any possibility where the banks will be focusing on their clients that we're having challenges, because at the end of the day, this working capital is a new loan they're giving to this client. It's not coming to replace the existing loan. And part of the criteria for this fund, it cannot be used to pay an existing loan. It can only be used as working capital for the business, either paying salaries, paying rent, or other or buying materials and all that. So there's no way they can use it to support a failing business. If anything, because they're taking this credit risk, a business that I think is struggling might not really qualify for this fund, because it doesn't meet the credit risk criteria. So it cannot be a straight line. Of course, we try to follow up what the banks are doing, and we've worked agreed with the Minister of Finance. We have Minister of Finance, RDB, Minister of Commerce. These are the main players on the side of the government, to go out and even educate the public, educate the businesses to understand their rights and obligations vis-a-vis this fund. So when they come to engage the banks, they know what is expected on them, and they know what they expect from the banks. And if there's any problem, then they can contact the government officials.
I'd like us to go to our tweet, social media feed. We don't have a lot of time, but at least we'll manage. I'm sure we'll manage to read a few tweets. And the first tweet, if we can have it on our screen, please, is from Amanya Franklin, who asks, Bernard, the central bank has revised a key repo rate as a way of boosting liquidity in the financial system, but non-performing loans are also increasing due to the extended debt recovery period granted by some microfinance institutions to borrowers. Isn't this worsening the already sick SMEs? And I know we talked briefly about this, but Governor, would you like to just quickly respond to Franklin?
Yes, okay. I don't know how the two are being linked anyway, the central bank rate and...
yes.
But yes, it's true, but it was expected that this crisis would increase the credit risk of the borrowers of banks. And based on that, the central bank agreed that special window of restructuring, because normally we restrict restructurings of businesses, of loans within banks, for them to avoid them keeping dead loans on their books when they should be written off, and at least we know exactly where they are standing. So, but because there's this crisis, we expect that businesses will be hit beyond their means or their making, and therefore there's that window of allowing restructuring. So the restructuring is to give a breathing space to the borrowers, at least to allow them time to kickstart their businesses and be able to generate cash flows that will help them support the financing of their loans. So there's no way that this decision to lower the central bank rate would worsen the situation of the NPLs. If anything, the decisions taken by the central bank was to allow financial institutions to give their clients breathing space for them to be able to avoid falling to the NPL category because of the crisis we are in. And therefore, we hope that within the next 6 months or so, they'll be able to generate cash flow that can allow them to start servicing the loans. But yeah, it's expected. It comes with the extended risk, more risk than we had. Yeah.
Speaking about businesses, the next tweet, and I think you alluded to this earlier on, Charlie, is from African Patriots, and from Pan-African, who asks, even if flights resume in the next 2 or 3 months, it will take perhaps the rest of the year before visitors, especially tourists, return. If there is zero income for the hotels, how will they service the loan, since the fund is a loan, albeit at a very low interest rate? And Charles, I think you alluded to this in terms of what businesses are there. Governor, is that something like this?
Yeah, I think I had more or less responded to that.
Yes.
That's why the hotels are being given a grace period of 3 years. So it's expected that within these 3 years, they are not expected to be servicing their loans. And we hope that within those 3 years, they will have started generating or getting businesses that, again, will give them cash flow that will allow them to service the loans.
Yeah. And this is also from one of our viewers who asks, and I know most of these tweets are coming in when we've talked about some of these things, but we'd like to also just respond to our viewers. And if you can have this on our screen very quickly, this tweet is from Mfizi, who says that the governor spoke about showing how big your business was hit by COVID-19 by showing last year turnover for the same period. What if you were just starting your business in February 2020 and have put all your savings into it? How can you be supported by this fund? Is this applicable?
Yes. Okay. Yeah. There's a provision in the guideline that if you are not operational the first 5 months of last year, at least you can demonstrate using your recent business records on how you are hit. Okay. If you are starting in March and therefore you haven't started working and you are put at a standstill, it's difficult to know how that business was. It's expected that you still had your capital there anyway. But if you had started operations already and you're able to demonstrate that these operations were affected by the COVID and able to demonstrate that your business turnover was hit to that level, then you qualify. So that there's a provision within the guidelines that we are not only going to be looking at the first 5 months. It's the best criteria, but those who started after that will also be considered.
I think we don't have much time, but I'll read the last tweet. This tweet is from Patience Mutasi, who asks, how will women-owned businesses, particularly the micro ones, be targeted to benefit from the Economic Recovery Fund? So is there a deliberate emphasis on women-owned businesses, especially SMEs, Governor?
Yeah, okay. We don't have a specific provision in the criteria or in the guidelines issued by the Minister of Finance for that. But I think all SMEs will be looked at the same way. But it's always, I think, as I said earlier, we can see how that is really brought on board. As I said earlier, those that are going to increase or to assure more jobs protected, more turnovers, I think this can come up as one of the criteria. When there are many and you have to select among the many, that could be added as one of the criteria that will give priority to a business owned by women.
Okay. We have one last tweet from Richard Rugwajira, and Richard's tweet says that success of the fund will depend on the uptake and utilization of the firms. Hopefully it won't be the case, such as BRD's Export Growth Fund, where there was inadequate capacity and viability to develop bankable cases. Can the governor provide some assurances on speed?
I think this two in one. One is speed, and the other is to prove that it's a bankable project. Yes. The good thing is these are already ongoing businesses. It's not startups. So exactly. So as an ongoing business, normally it's easier to demonstrate to show your income streams, and therefore you can easily be assessed. So of course 50% already is for existing loans, so for that it's easier to absorb, but the others I don't think it should be a big problem. Of course, yes, there might be firms that will fail to demonstrate that they can pay back the loans, and those might be excluded. In fact, a challenge that we're discussing today, so a firm will come expecting that there's government money in banks that automatically should be assessed by anybody that was hit by COVID, but the challenge is that the assessment might show that you are hit beyond recovery. So even if they give you this money, you won't be able to pay it back. And in that case, the bank wouldn't be able to approve your loan application. I think as we are discussing today, this is something that we are going to discuss at the National Steering Committee level. But I think just a quick one is to say, those that don't qualify, that don't seem bankable, but were affected by the crisis, I think banks should be reporting that to the government as well. Then the government can decide what to do. But the banks can only approve the loan if you are able to service the loan.
Thank you very much, Governor. We've come to the end of the show. As always, time moves by so quickly. This is a meaty discussion. I think we'll definitely need several parts on the show. Thank you very much for joining us and sharing very insightful and informative comments. To our viewers, thank you for tuning in. Have a good night. Keep the conversation going on the social media feed, and see you again next week. Have a good night.
Nitwa Nikuze Piolette.
Nikuze? Zanira amazi mu kirahuri.
Nikuze.
ariko umukobwa uruzi ko ariko arya rugo
gahundeba umukozi wo mu rugo
ahubwo reka nkubwire inkuru nziza ubona ko uboneye umukozi
kuryamanye n'abayayi
ubuzima iki gitangaza tumaranira cyageze hano ku isi mu myaka miliyari enye ishize naho twebwe abantu twaje ejo bundi mu myaka 200,000 ishize ariko ninduzi inkomoko yacu n'ubuzima turimo ese ubu iyo tumenye iyo dukomoka iyo tujya tukamenya amakuru avuga iyava tukamenya uyatangaza byari kugenda bite ubu iyo tuza kumenya inkomoko y'ubuzima ikoranabuhanga imibereho n'imibanire y'abantu n'ibinyabuzima n'impamvu tubaho uko tubayeho uko byari kugenda bite kurikira ikiganiro inkomoko kuri televiziyo Rwanda buri kuwa kane 3:30 z'ijoro.
Happy Wednesday and a very warm welcome to tonight's bulletin on this 17th day of June. These are our top stories. On Wednesday, President Paul Kagame joined heads of state from across Africa for an extraordinary China-Africa summit on solidarity against COVID-19 hosted by President Cyril Ramaphosa of South Africa, President Xi Jinping of China, and President Macky Sall of Senegal. Investors in the tourism sector are happy about the decision made to resume tourism activities. And on the international scene, Beijing raises COVID-19 alert level after new outbreak. Good evening and many thanks for making a date with us tonight. I'm Gloria Mutesi. On Wednesday, President Paul Kagame joined heads of state from across Africa for an extraordinary China-Africa summit on solidarity against COVID-19 hosted by President Cyril Ramaphosa of South Africa, President Xi Jinping of China, and President Macky Sall of Senegal. Addressing participants, Rwanda's president stressed the importance of cooperation during times like these.
The government of the People's Republic of China and the Chinese private sector provided crucial supplies of testing materials and medical equipment in Africa when it was needed most. This effort has saved lives and continues to do so. We also appreciate China's recent $2 billion funding pledge for COVID response, as well as its support for the G20 debt initiative.
On his part, President Ramaphosa emphasized the challenge Africa now faces is not to be underestimated and thanked leaders for rising up to the challenge.
Against COVID-19 demonstrates the depth and resilience of solidarity between China and Africa. Allow me to express the gratitude of the people of Africa to President Xi and the government and the people of China for their generous donations of various diagnostic as well as therapeutic medical equipment that has been provided to our continent. We truly thank you for this, and I wish to thank President Xi for the several fruitful discussions that he and I have had during the course of this pandemic, and also thank him for his willingness to engage on the issues that African countries are facing right now.
During the virtual summit, calls were made for greater cooperation by all parties participating in the fight against COVID-19. Officials at the central bank have reminded businesses affected by the lockdown that was caused by the COVID-19 pandemic that they can turn to the financial institutions for loans as part of the recovery fund as long as they fulfill all the requirements.
The recovery fund was launched during this month of June, and of the 100 billion Rwandan francs it is starting with, half will go towards hotels, 30 billion has been allocated for big companies, medium-sized ones will get 15 billion, while small ones will share 1 billion Rwandan francs. 2 billion has been allocated for SACCOs, and small businesses have been allocated collateral worth 3 billion Rwandan francs, and anyone approved for a loan can be covered at a rate of 75% through the Business Development Fund, BDF. Certain requirements must be met, however, before a business can be approved for the loan. You are allowed to go to your bank or any other financial institution you work with and show that your business was affected by the pandemic at a rate of at least 50%. Prove that you have been operating well before the lockdown and that you repaid your loans with no problems in the past, and also your taxes. You must also show how, if approved for the loan, you will be able to boost your business by 75% and pay your employees well, possibly even hire more. Not all businesses will get equal amounts, seeing that they are not all equal in stature. Those with operations worth more than $500 million Rwandan francs per annum will get loans of no more than 300 million Rwandan francs at an interest rate of 8%. For those below $500 million, they will get no more than 75 million at an interest rate of 8%, while those in the 20 million range will get no more than 5 million Rwandan francs in loans at an interest rate of 8% as well. The Private Sector Federation believes this is fair. An example would be hotels and the fact that they are not operating, in all honesty. They will look at how you were operating last year from January to May and compare it to this year. If your operations fell by 50%, then you are automatically eligible for that money. Hotels with outstanding loans owed to banks will be able to pay back just 35% of them over a period of as much as 15 years, with grace periods of between 3 months and 3 years depending on the category of the borrower and the size of the loan. This is seen as encouraging. The issuing of loans had slowed down, yet that is what keeps the economy going. There were concerns that businesses might not be able to pay back the money even after the pandemic has passed. This is especially true for domains that have remained closed even now, such as schools. First, I believe sensitization is necessary so that people understand the importance of this fund and how it is functioning so that the economy does not backslide after so much progress made. The government has certainly taken enough measures to protect the economy in the future so that it does not suffer too much in the long run. Officials in the central bank are warning people against misusing the loans. Anyone taking that money should use it for what it is meant for, because there will be follow-up and anyone misusing it will be punished severely. Also, each business is allowed one loan, so you cannot get it at one bank and then go to, say, a microfinance institution to get another. People need to exercise discipline. Assurances have also been given that the money in the fund will be enough to meet demand, taking into account that more will be gradually added and businesses will also pay back what they took with interest.
This is an update from the Ministry of Health. Today, Rwanda registered 3 new cases of the coronavirus, of people with coronavirus, rather, among the 2,508 tests that were conducted today, bringing the total number of tests conducted so far to 99,309. Rwanda also registered 9 new recoveries, and the deaths still stand at 2. The active cases are 219. Now, investors in the tourism sector are happy about the decision made to resume tourism activities, and though they faced great financial losses during this pandemic, they plan to put enough effort to bounce back from it. Jane Mutoni has this report.
Investors in the tourism sector are happy about the decision made to resume tourism activities, and though they face a great financial loss during this pandemic, they plan to put enough effort to bounce back from it. The tourism sector contributes 12% to the country's GDP and employs around 140 people. Those in the tourism sector are happy with this decision made by the government after 90 days of the sector's lockdown to prevent the spread of COVID-19.
All of us in tourism sector, this is the time that we've been waiting for. We are all happy. Other players, I think also Rwandans might be happy because this is now the right moment that everyone will be waiting for. Since again we are having staff to be paid, we are having some time bank to be paid for, we are having the normal cost that we're incurring, so we've been affected heavily compared to, I think, even compared to other businesses.
The CEO of Hotel Shelando, Anne-Marie Kanhengwa, notes